SBI in focus for the second time this week. Goldman Sachs put out a note on SBI with a target price of 282 rupees per share, which represents a 40% upside to SBI's closing price yesterday. Now, there's numerous reasons for this. Firstly, the Q1 earnings they thought were extremely good on all counts, and that's why they're upgrading their earnings estimates. They also like the asset quality prospects, given that SBI just had around 9 to 10% moratorium, which is comparable with the likes of an HDFC, a Kotak, and an Axis. So best-in-class private banks also had similar moratorium levels, and SBI is one from the PSU pack that can kind of compete, whereas most of the other PSUs had significantly higher moratorium across their loan book. A couple reasons for this are that SBI has a lot of mortgage. It also has a very high customer base coming from government employees, and there hasn't been much attrition or layoff within the government job segment. So those payments towards those interest obligations have been met, which is why SBI has surprised everyone, in fact, and come out with a far better than expected moratorium figure. Now, apart from that, there's a couple things you have to factor in: subsidiaries, right? They have SBI General Insurance, SBI Life Insurance, SBI Card. These are just some of the subsidiaries which have grown tremendously over the last 3 to 5 years. And if you factor those in, then the SOTP valuation of SBI shoots up significantly, which is actually what's led to these increased targets now across two brokers. CLSA last week had a note titled Deep Value 5 Reasons to Buy, in which they had a 300 rupee target on SBI. So in that sense, Goldman's is around 10% lower than CLSA's, and even CLSA had similar reasons, except the CLSA report also said that the Yes Bank bailout was conducted really well by SBI. Let's remember, SBI was the first bank that gave Yes 7,800 crore. Post that, we saw a flurry of funds coming in from some other private banks as well as the other institutions that participated. So SBI also played a critical role in the survival of Yes Bank, which has now today completed a second round of FPO, and things seem to be stable there now. So given that in such a crisis time, SBI was able to balance the minority shareholder interest with the national interest, a lot of these brokerages are now starting to pay cognizance to that, and it's a qualitative or rather qualitative feature that we don't usually look at in banking. We look at metrics, performance more. So that's the CLSA view. Goldman also says that the provisions have already been fairly high on the total stress book. SBI is a strong proxy to easing financial conditions. So those are some direct lines from the note. Do have a read if you're interested. But looks like now that you have two large international brokerages coming out with strong buys on SBI, we saw a little uptick in the bank nifty today in the markets. SBI was also not doing too bad over the last two trading sessions in contrast to where it's been. So it seems that a couple more of these might really change the way people are looking at SBI, which currently trades at 0.3x price to book, which is one of the cheapest valuations for a bank its size in the Indian domestic equity markets.